accounting firm says documents from 2011 to 2020 should no longer be relied upon, and advised the Trump Organization to inform anyone who had received the statements not to use them when assessing the financial health of the company or the former president. The statements are at the center of two high-profile investigations, a criminal probe by the Manhattan District Attorney and a civil investigation by New York Attorney General Letitia James. Just last month, James said investigators had uncovered evidence that the former president and his company used fraudulent or misleading valuations of its golf clubs, skyscrapers, and other properties to get loans and tax benefits. The Trump Organization responded in a statement yesterday, saying it was disappointed that Mazars had chosen to part ways, but also noted the firm hadn't found material discrepancies in Trump's financial statements.
So, Tom, talk about this move. People that I called yesterday trying to figure out exactly what this meant said bad news for the Trump Organization. Accounting firms hardly ever do this, let alone discount what's happened over the past 10 years. Said this was a pretty extraordinary move.
Sure. So if Mazars was digging through the files of the Trump Tower on Fifth Avenue and found $100 million worth of cash in the basement, I don't think they would be picking up the phone or typing up letters that would say, you know, we've really got to restate your financial statements for the last 10 years. This is not a good development. And every single expert that we've spoken with has said that this is not something that is normal. This is highly unusual that they would send a letter like this, and that
what were they doing? Why did they send this letter?
Well, they said that they, first off, paid attention to what Mika referenced, which is the Attorney General's filings back in January, and some of the revelations that the Attorney General says that they've come up with in the course of their civil investigation. On top of that, they said that they had their own internal investigation, and they received information from both inside the company and outside the company that led to them making this decision. And they said that they have a non-waivable conflict of interest now with the Trump Organization, which could be potentially a problem, saying, look, there's no way the Trumps can waive this here. They can't say, well, no, you can stay on. This really isn't a conflict of interest. Conflict of interest, Mazars says, is on their side of things. And so as a result, they came out and made this statement. The letter was sent initially on February 9th. It was then provided to the Attorney General, and that's why we're able to see it today.
So, Tom, they say they can no longer stand by a decade's worth of these documents. Does that mean that they prepared fraudulent documents and they're acknowledging that now, that they inflated or deflated the prices of properties, inflated the square footage of an apartment at Trump Tower? Or does it mean that someone further down the line doctored these documents and changed the numbers?
Well, it's the right question, and it's probably a little bit too soon to say. So, you know, accountants will tell you are only as good as the information that they're provided. So if they were provided with the wrong types of information, they were not provided with the right underlying documentation, or somebody instructed them to make material changes to it, those are all the types of things that we're going to have to see what comes out in the course of these various investigations that you referenced.
John, what's your take on it?
Well, the document that they released last night, if I read that document right, suggests that the accounting firm has already provided over 500,000 pieces of documentation. That's with the
right. There's a Bates number.
There's a Bates number, which means that it's 525,000 at minimum pieces of information, which is a very large number. And the second thing is that, and this I ask you, Tom, I saw some speculation from other legal experts last night that the conflict of interest could suggest that the accounting firm is now flipped, basically, and is cooperating actively with the investigations. That's why they realized they were in trouble. They don't want to go to jail for Donald Trump or face huge civil penalties, and they're now all in on both the civil and the DA's criminal procedures.
It's certainly possible. It could also just signal that, hey, our attorneys have looked at this, and we might have an issue here where at some point we're going to have to say something that's adversarial to you, our now former client. So it may not have gone that far just yet. We don't have any indication of that from the filings. Nobody has told me specifically that that's the case. But does the possibility exist? The possibility does exist.
I know this is all just coming together. Is there any, everyone says this is quite big. This has a lot of significance. To explain how that means, is there a precedent? Is there an example of this happening before that would give us an insight as to where this is leading?
Well, typically we see it in public companies. So when private companies have this happen to them, it's usually not something involving a former president of the United States, and it's not something that garners this type of attention. If it's something that happens with a public company, if the Trump Organization was publicly traded, we'd be looking at a stock that would be down 50, 60, 80% this morning, because this is normally very concerning returning to investors. That's not the particular case here. But I think when you look at this, the bigger impact might be for Donald Trump's wallet and the Trump organization's future, in that if there were material misrepresentations here, there could be covenants in the loans that the president has with various financial institutions where they could say, hey, look, we have a reason to call this loan in, or we have a reason to perhaps adjust the interest rate that you're paying. This raises all sorts of issues, according to financial experts that we've spoken with, and my colleague Gretchen Morgensen has spoken with, about where does this go for the future of the Trump organization in their outstanding loans.
Very hard if you're a company trying to service debt or deal with loan covenants to have an accounting firm turn on you in this way, to ever hope to get any kind of finance again in the future. I think a short of an indictment, and it's so rare, Joe, as you point out, accountants doing this kind of thing. They don't do this. Short of actually getting indicted, it's one of the worst things that could happen in a company, in an investigation or a legal proceeding. I think, where it will go, who knows, but it's bad news.
Yeah.